Breaking down the headline inflation of 5.22%. Recently, India's latest inflation data was released, and it's something we, as market watchers, should pay attention to. After months of worrying about rising prices, retail inflation, measured by the Consumer Price Index (CPI), cooled down in December 2024, hitting a 4-month low of 5.22%. Source: India Data Hub. This is important because inflation directly impacts the cost of living. For families, businesses, and policymakers, lower inflation brings some relief, but it also comes with its own set of challenges. Over the past few months, inflation has been steadily dropping. It peaked at 6.2% in October 2024, eased to 5.5% in November, and now, December's 5.22% marks the lowest level in 4 months. The main reason behind this decline is the drop in food prices, which has been one of the biggest factors driving inflation in the country. Source: India Data Hub. Food prices, however, can be unpredictable since they're influenced by things like weather, crop production, and global markets. In December, food inflation eased to 7.69%, down from 8.2% in November, a noticeable improvement. Source: India Data Hub. The drop in inflation was largely driven by a big reduction in vegetable prices, especially for staples like onions, tomatoes, and potatoes. Source: India Data Hub. These items are a big part of the average Indian household's diet, so when their prices go down, it brings immediate relief. For example, vegetable inflation fell to 26.6% in December, the lowest it's been in 4 months. Source: India Data Hub. However, not all food prices came down. Edible oils, for instance, saw their prices jump by 14.6%, the highest in 32 months, due to factors like import taxes and global supply issues. Similarly, essentials like milk and meat also became more expensive. While food prices usually grab the most attention, there's another part of inflation we should keep an eye on: core inflation. This excludes food and fuel since their prices can be very unpredictable and might not give a clear picture of overall inflation. In December, core inflation stayed steady at 3.6%. Source: India Data Hub. This is good news because it shows that the prices of other goods and services, like education, healthcare, and transport, aren't rising as quickly. In fact, core inflation has stayed below 4% for over a year, which is a sign of stability in the economy. According to CareEdge ratings, the outlook for agriculture looks positive. Strong kharif production and good conditions for rabi sowing, supported by healthy reservoir levels, are key factors. As of the end of December, rabi sowing is up 0.5% compared to last year, showing solid progress. This should help bring food inflation down even further. On the wholesale side, India's Wholesale Price Index (WPI), which tracks inflation at the producer level, rose slightly to 2.37% in December from 1.89% in November. Source: India Data Hub. This increase was mainly due to higher costs for food items and textiles. However, on a month-to-month basis, the WPI actually dropped by 0.38%, which shows some easing in manufacturing costs and primary articles like crude oil. The Reserve Bank of India (RBI) is likely keeping a close eye on these numbers. In the recent Monetary Policy Committee (MPC) meeting, the policy repo rate was left unchanged at 6.50%. Most members, including former Governor Shaktikanta Das, supported this decision, emphasizing the need to balance inflation control with supporting economic growth. However, Dr. Nagesh Kumar and Professor Ram Singh voted for a 25 basis point rate cut, arguing that it could help boost economic activity without significantly affecting inflation. In December, the RBI projected headline inflation to average 4.8% for the quarter, and the actual numbers have aligned with this forecast. This has sparked fresh discussions about whether the central bank will cut interest rates in February 2025 to support growth. Lower interest rates make borrowing cheaper, which can encourage businesses to invest and consumers to spend, giving the economy a much-needed boost. However, global uncertainties, such as fluctuating oil prices and a weakening rupee, make the situation more complicated. Imported inflation is another factor adding to the challenge. In December, imported inflation rose to 5.4%, the highest in 22 months. The rupee has weakened by about 4% against the dollar since the financial year began, making imported goods more expensive. This could limit the RBI's ability to lower interest rates in the near future. Adding to the mix, the RBI now has a new governor at the helm. It will be interesting to see how he manages the tricky balance between cutting rates to support growth and keeping inflation under control. In summary, the drop in inflation is a welcome relief, especially for households struggling with high food prices. But the overall picture remains mixed. While vegetables are cheaper, essential items like milk, oils, and proteins are still expensive. Core inflation is steady, signaling stability, but the rise in imported inflation presents a longer-term risk. According to India Data Hub, inflation continues to pose a challenge for rate cuts. While headline CPI has eased, the pace of decline hasn't been sharp enough. The rupee's persistent depreciation only adds to the complexity. Globally, monetary easing is also on hold, with Fed fund futures showing less than a 50% chance of a U.S. Fed rate cut by March. Given all this, it seems likely that the RBI will maintain its current stance in the February policy meeting. Tidbits. HCL Tech reported a net profit of 4,591 crore rupees for the third quarter of the 2025 financial year. This marks a 5.5% increase compared to the same period last year and an 8.4% rise from the previous quarter. The company's total revenue for the quarter stood at 29,890 crore rupees, up 5% year-on-year and 3.5% quarter-on-quarter. HCL Tech also raised its revenue growth forecast for the 2025 financial year to a range of 4.5–5%, an improvement from the earlier estimate of 3.5–5%. This updated guidance includes the impact of its acquisition of Hewlett-Packard Enterprise's Communication Technology Group assets. China reported a record trade surplus of $992 billion in 2024, a 21% increase compared to the previous year. This growth was fueled by strong exports, including $525 billion worth of goods shipped to the United States. In December alone, exports to the U.S. reached $49 billion, the highest monthly figure in over 2 years. While global demand for Chinese goods remains strong, imports into China have been held back by weaker domestic spending and lower commodity prices. Urban Company, valued at $2.1 billion as of June 2021, is planning to file for an IPO worth about 3,000 crore rupees by March 2025. The IPO will be managed by Kotak Mahindra Capital, Goldman Sachs, and Morgan Stanley. Urban Company operates in over 50 Indian cities, as well as in the UAE and Singapore, offering services like beauty treatments and appliance repairs. This edition of the newsletter was written by Bhuvan and Anurag. Subscribe to Aftermarket Report, a newsletter where we do a quick daily wrap-up of what happened in the markets, both in India and globally. Thank you for reading. Do share this with your friends and make them as smart as you or winking face join the discussion on today's edition here.